Hello everyone, Dave Landry here from DaveLandry.com, and this is your Daily 5. Once again, I am super excited about stocks, and I'm also super excited about crypto. Don't want to confuse the issue with facts, but I think Bitcoin could be becoming a legitimate asset. We'll get to that in 1 second. I also want to update the TFM 10% system in the S&P 500 and the Qs to show you where we are now. So let's dive right in. Let's talk about big picture news reversals using Bitcoin as an example. So the spot ETF was approved right here. Initially, the market rallied quite a bit, but then it came right back in by the end of the day, and then it began to sell off, as you can see. Now, everybody and their brother came out and said, well, that's it for Bitcoin. That's the end of Bitcoin forever. And me, I wasn't so sure. Years ago, I worked with Larry Connors. I did some research for him. I did some programming for him. And I helped some of the other people on the team select stocks. And one thing that Larry often talked about was big picture news reversals. So you wait for some sort of news event to occur, you see how the reaction shakes out, and then you look to go the opposite way once that high gets taken out. And one example I often give is I was speaking in Dallas probably 15 years ago now, and I think that was right around the time Mr. Jobs was not doing so well, and it was pretty obvious he probably wasn't going to make it. And somebody asked, how do you feel about Apple with Steve Jobs being sick? And I said, well, look at where Apple closes the day the news is announced, because at that point it was a fait accompli. And then look to buy Apple should it take out that close. Now, in Bitcoin, you can see that the high right here again, when that high gets taken out, so your buy would be over here, as far as a big picture news buy. Now, I don't trade these big picture news items in and of themselves, but I think it's a tool that you should have in your toolbox to help you determine whether something is bullish or bearish. But you can see the market has taken off nicely since, so the spot ETF obviously has been accepted. Now, this brings up some questions. Is it a legitimate asset now? Now, one of my favorite sayings is, don't confuse the issue with facts, and that means don't try to put logic and reasoning into your charts. Yes, know what sector you're in and know whether or not that sector is trending, and a few other things like make sure you have enough volume to trade. But other than that, don't try to interject a whole lot of reasoning or look for some sort of theme to play out. Now, with that said, talking out of both sides of my mouth, I do think that this spot ETF does help to legitimize Bitcoin. Now, any fund who could only invest in stocks and ETFs, they now have an avenue to buy Bitcoins, whereas before they couldn't buy Bitcoin based on their charter. So that's billions and billions, if not trillions of dollars, potentially, and I know you got to be careful when you make these arguments, but it does, again, open Bitcoin up to these funds. Now, there's a lot of people who have called me over the years, a lot of older people who've been around for a long time, they just can't seem to wrap their head around Bitcoin. I mean, I'm old, but I'm not as old as people talk about, and nor do they care to. But now that there's a spot ETF as opposed to an over-the-counter bulletin board type of security, the GBTC, for instance, now that that's legitimate as a spot ETF, I think a lot of these people will be buying into it. And again, not to confuse the issue with facts, but we all know that the maximum Bitcoin that could be possibly created is 21 million. And years ago I did an article on that, and that means that everybody in Florida could own one, and that's all that exists in the world, or every other person in California could own one. So there is a bit of a scarcity there, but I think that the ETF will help create a little bit of the FOMO, and a lot of people, maybe just for S&Gs, might buy a few hundred shares of one of these ETFs, thereby creating the demand. Now, one thing you have to remember is, speaking of FOMO, is that you should never forget that you're trading traders and not markets. And I think that as more and more people begin to pile on, that should help the market. Now, as usual, you don't want to confuse the issue with facts. And now here I go, confusing the issue with facts. The bottom line is you want to look at the charts and make sure the chart is trending. And if the chart's going down, in spite of all this bullish reasoning, easy for me to say, then the chart is going down. It is what it is, and that's a hard thing to come around to. Trading is what is. So there's a lot of naysayers out there, and I think that's a positive thing. And I love the fact that all of these people came out of the woodwork when Bitcoin began to sell off a little bit after the ETF. Predict early and often, I suppose, is their mantra. So again, I'm not going to build a case for this. If you do want to build a case for Bitcoin, watch somebody like Michael Saylor, and I have to be careful watching him. I try not to watch him because he has such convincing arguments, just silly things like your power is very expensive over here, your power is very cheap over here, but you can't send power from here to here because of the lines and transmission. You lose all this stuff in the meantime, attrition, so to speak. But you can mine Bitcoin over here where it's cheap and send the money over there to buy power. So some of these arguments kind of blow your mind a little bit. But again, make sure you look at the charts and make sure it's OTE buckwheat. So check back often. I'm bullish, and I have a little bit of a bullish case for Bitcoin. But I usually never mention what a stock does or never cared. I don't care about Bitcoin. If it begins to tank tomorrow, then I'm out. All right, let's talk a little bit about Landry Light. Really simple tool. In fact, I think the 30 EMA is probably your best friend for crypto and stocks, and we'll get back to that in just one second. But you can see that down here we had downside Landry Light. That means the lows are less than the moving average, but notice that a trend didn't materialize. We had 4 or 5 bars of downside Landry Light, maybe a few more, and then the market began to rally. 10 is a good round number for a trend to be developed, and once you have about 10 bars of Landry Light, then the market is possibly trending. And you can see right here, nice little uptrend beginning to unfold. Lots and lots of Landry Light. Again, the lows are greater than the moving average. Now, well, how do you get in? Well, now you have to wait for pullbacks. And a Landry Light pullback would be a great thing, and that's just where you wait for the stock or ETF to pull back to the 30-day EMA. In this case, it would be crypto, obviously. Markets are markets. You're trading traders again, not markets. So wait for pullbacks. Now, once a market gets stretched far away, here you have Ethereum, for instance, then you might just play more of a generic pullback. If you wait for it to pull all the way back to the EMA, then that might be too far. So again, EMA is still your best friend. It's in a nice uptrend. Don't just willy-nilly jump in. Although, not to talk out of both sides of my mouth, sometimes in crypto, when all the pairs are running, those altcoins, you can just buy the strongest pairs that are going straight up. But that's another story altogether. That's kind of like a breakout trading type of way of trading. And for the most part, I use pullbacks. But when you get a market that's just going straight up, sometimes your best trades come from the pairs that are going straight up. Sort of like stocks were in 1999. So as you just saw, Ethereum is looking pretty good. It's beginning to catch up to Bitcoin. Let's take a look at Bitcoin with the bow ties. Now, bow tie proper order means that 10 is greater than 20 and 20 is greater than 30 for uptrends. Now, notice down below, this counts the number of days, not the magnitude. And this is a plugin available. Just like this video and then click this little plugin down here and you get it for free if you have ACP. That's in the ACP platform, obviously. Stockcharts, ACP. Anyway, notice this is really good down here, and it wasn't a really nice trend for a while, but notice late in that trend, the market began to trade sideways, so you always want to check the chart itself, obviously, and look for the net price change. Now, it did try to break out a little bit, but then it came right back in, and again, that was right around the time that the spot ETF was introduced. Now, downside bow tie proper order would be the 10 is less than the 20, and the 20 is exponential, by the way, and the 20 is less than the 30. You can see the parameters over here. The 10 is simple, the 20 is exponential, and the 30 is exponential. And again, you can use the plugin for the plotting of this indicator down here. By the way, as I often preach, indicators don't really indicate. They do or can illustrate what's happening in the chart. So we know it's in a trend back here. And then, like I said a minute ago, this down here says it's still in a trend, but if you check the chart, you can see that the momentum had slowed. But now, momentum is picking back up again, and again, uptrend proper order, 10 greater than 20, 20 greater than 30. So far, so good. By the way, this was a bow tie setup. 10 is less than 20, and 20 is less than 30, downtrend proper order. And then after that, you wait for a bit of a pullback. You only need a 1-bar pullback to satisfy this pattern. And also, by the way, you want to trade this off of major highs or major lows. So this was a major high here, multi-year highs. So this would have been a sell setup, but it did not trigger an entry. Now, this was a buy setup in here for the bow ties. However, I don't take that setup in and of itself when it's not coming off of major lows. So if crypto or whatever the case may be, Bitcoin, I guess in this case, was hitting a 10-year low, a 20-year low, whatever the case may be, then I'll get pretty excited about a bow tie from those levels. Remember, a bow tie is a trend transition pattern or an emerging trend pattern, and you want that to occur at some sort of inflection point, be it a all-time highs for stocks or at least multi-year highs for stocks or multi-year bottoms, or for any market for that matter. So kind of interesting, Bitcoin versus the S&P 500. And you can plot these really easily, by the way, this little ratio. This is a ratio. You just take one asset and then put a colon in between it and then put the other asset. So this is Bitcoin to S&P 500. As long as it's climbing, it's outperforming stocks, basis the S&P 500. When it's dropping, it is not. But you could see, you could use a little technical analysis in here and maybe put on a little bit more crypto in certain conditions and maybe a little bit less stock to play the relative strength game there. But you can see it's really been doing well for quite some time. Now let's jump into stocks, and I want to do a brief update on the TFM 10% system. As I've said before, when a market gets 10% or more away from its 50-week closing high, that's a point where you really need to think about getting out, especially if it's also below its 50-week simple moving average. I use a simple moving average for this system because I'm not looking for something that's going to catch up to the market quickly. I'm actually looking for a little bit of lag to stop me from chasing my own tail, to make sure that the market really is in trouble. But anyway, I came up with these zones. A client of mine named Jeff, I guess about 6 months ago, he says, Dave, once you're a little bit more than 5% away, or 5% or more, I should say, away from that 50-week closing high, I tend to just get out of the way, kind of sell first and ask questions later. And I get that, and I think he's on to something. That's why I put these zones in here, kind of wake you up a little bit. And the bottom line is, the beauty of this is, as long as it's green, or you're in the green, I should say, then the market is really doing well. Try not to get too excited about the zig or zags. And if you go back, if you look at a daily chart, these are exacerbated a little bit more. But there were so many people calling for the end of the world every time stocks had a little bit of sell-off, and then they continue to go higher. Now, eventually it will end, but as long as the trend is up, the trend is up. And as I often joke, my nickname is Trend Following Moron. And a lot of people, a lot of my clients at least, when they email me, they often write, fellow TFM here. Now, one thing I wanted to do this time was I wanted to take a step back and show you my thinking behind this system. If you notice down below, this is percent from closing high, and we're using 90, so it would be the equivalent of 10%. And 50 is the period. So on a weekly chart, you're looking at a 50-week closing high, which would be right here, and then you subtract 10%, kind of like the zones, but just a line in here. And the reason I wanted to show you this with this little indicator down here, a little formula, I should say, is that bad things tend to happen when you get 10% or more away from the 50-week closing high. So as you can see down here, and if you have time, go back and look at the entire history of the market, and also look for some presentations. I'm at Dave Landry on YouTube on the TFM 10% system, and a lot of those presentations that show the spreadsheet with all the drawdowns over history that would have been avoided. So that's the designer's intent, so to speak, is to avoid those big, as Ian McActivey used to call them, diaper change moments where you have this huge panic. Now, the market did snap back here. This is after the pandemic, but not after dropping about 30% or more from that sell signal. And as I said 1,000 times, I had a friend of mine was visiting right around here, and he didn't look too good. He was nearing retirement, and the markets were really stressing him out. So it's better to get out of the way and risk getting whipsawed than it is to get wiped out. And Greg Morse says it the best, and I quote him almost weekly on this: whipsaws are frustrating, bear markets are devastating. You could survive frustration. But you can see over here, once you were 10% or more away from that 50-week closing high, the market didn't behave so well. And you can see it was a pretty serious drop off. Now, there's no guarantee in trading, but so far, this silly little system would have kept you out of every bear market in history. Now, forget how long ago I developed it. It's probably been at least, I'd say, 5 or 6 years. There are the rules real quick. I'm not going to obsess too much over them. Again, I've got a lot of presentations where I really walk you through the details. But the bottom line is you close 10% or more away from that 50-week closing high, and you close below the 50-week simple moving average, and that's your exit. You can see the last signal, as I've said quite a bit, was a whipsaw. It did not continue to implode. Now, somebody on Twitter, or X now, I guess, when I posted this system, they did their own due diligence, and they said, you know, Dave, there's a 60% chance the market will drop another 10% or more once it drops 10%. Now, obviously, that didn't happen in this case, but it has the potential. And as you saw in that prior chart, sometimes that could be 30% or more. And if you look at it historically, it's many numbers in the 50% or more, and obviously way back in the Depression, I think it was like 80%. And by the way, the NASDAQ, not that long ago, 1999, it doesn't seem like that long ago, but it dropped over 73%. So that's a pretty substantial slide. Anyway, the buy is just 2 bars of Landry light and a close within 10% of the 50-week closing high. So that would mean in the pink zone, which is 10% or less away from the 50-week closing high. 2 bars of Landry light and a close in the pink zone. Now let's take a look at the Qs. And here are your zones here. Green means you're within 5% of all-time highs, which we are right now, obviously just off all-time highs. So that's certainly a good thing. We had 2 bars of Landry light back here. And I did a little testing on the Qs, and they look pretty good. So for S and Gs, I thought it'd be fun, I know you're going to party with me, to buy 100 shares. And I did back here at $319.49. Now, when I bought it, I thought I'd just follow this little system, 100 shares, like who cares, just to see what would happen. And if you know me, I'm not a mechanical trader, although I've done a lot of mechanical testing in the past, and that probably helped me to become more of a discretionary type of trader, or a fully discretionary trader. So I was a little unsure exactly how I'd follow this mechanically, but I figured I'd give it a shot. Who cares? Again, 100 shares. Unfortunately, or fortunately, I should say, that did turn into quite a bit of money over time. So based on this little snapshot here at 436.03, that's $11,654. Now, one thing that I don't have built into the system is money management. It's a buy or sell type of system. Now, it would probably do better if I did put in some sort of money management where you're taking partial profits. But again, I'm just trying to follow 100 shares to see how it shakes out. I thought it would be a lot of fun. Now, the reason I said, unfortunately, earlier, in the back of my mind, I was thinking, that's like 60 points that I would give up, maybe a little bit more, if this thing stopped out by closing below this 50-week simple moving average and 10% or more away from the 50-week closing high. So another thing I never thought about a lot, and that's the beauty of actually trading a system, is you get a feel for these things that you don't notice when you're doing your paper testing. But anyway, a lot to give up, but I'm going to go ahead and give it a shot and see what happens. Again, I'm not a mechanical trader, but I am following this system mechanically just to see how things turn out. Well, that's it. I want to thank everybody for watching. If you need to contact me, DaveLandry.com/contact. I do a weekly webinar on YouTube. You can join that either live on YouTube at Dave Landry. When you go to YouTube, it's at Dave Landry. And make sure you subscribe and like my videos there if you don't mind. If you want to sign up for the webinar, DaveLandry.com/webinar. Bring your questions and favorite stock picks. We'll have a look at them, and I'll be happy to answer your questions. Here's all my other contact information. Feel free to contact me. So again, thanks so much, and may the trend be with you.